You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody. That music means it is time once again for Options Insider Radio. Yup, that's the interview program here on the network. The show that started it all way back in the dark days of 2007, pre-iPhone, all that good stuff. And here it is, still rolling on. My name is Mark Longo from the OptionSinsider.com, as well as, of course, from the aforementioned Options Insider Radio Network. Very glad to have an old friend of the network joining us back on the program today. He is Jim Toes, the president and CEO over there at the Securities Traders Association. Jim, welcome back to the Options Insider Radio program.
Well, thanks for having me, Mark. My old friend as well.
Not too old. Experienced, shall we say. How's that?
Experienced.
Seasoned. Well-seasoned. Yes. Like a fine steak. Well, Jim, it's coming up in that time of year. This is a busy time for you guys over there at STA. STA, of course, listeners, the mothership, effectively, of all of the various affiliate STA organizations. There's STAC for Securities Traders Association Chicago. There's STANY, Securities Traders Association New York. And kind of the mothership that helps keep the whole ball rolling is the STA, of course. And once a year, they have their big annual event, the Securities Traders Association Conference. It is coming up in a few weeks. Some might say it is nigh, Jim. So people are excited. We're getting ready for it here. First off, give us the dates. When can we look forward to? And then what can we look forward to on the docket of this year's event, sir?
Yeah, I mean, so listen, we're really excited about how the program's coming together this year. Just the response we're getting from all the panelists. You know, they're very engaged on this. It's a lot of senior folks who are participating this year. You know, we're well over 600 registrants so far, so we're kind of expecting, you know, a similar sized crowd as we had last year, which came in at around 725. So, yeah, no, we're pretty pumped with how things are going so far.
And obviously, you try to tweak it, you try to up your game every year. I was pleased to make my first trip to the event last year, and it was a fascinating event. A lot of crypto sneaking into the event last year, as you might expect. A pretty hot topic, continues to be a hot topic, as well as, of course, equities, market regulation, some options I know sneaking in there as well. So what are some of the tweaks? What are some of the new additions? What are you bringing to the table this year that will get the listeners excited there, Jim?
Yes, listen, we do have a lot of options issues that will be addressed on more than half of the panels that are being discussed here. So, you know, normally when you do these events, you kind of like, you know, how you organize the program sometimes is one way. Is sometimes you just kind of have like an exchange panel or an ETF panel or an equities panel, an options panel. This way we kind of went sideways with it, where the panel makeups are more diverse groups. You have an exchange person with a buy-side person or an options person with an ETF person, and kind of taking the matrix and going that way across it. So, I think, this year, I think, people who attend can kind of expect what they've got in the past couple of years, which is a real broad view of market structure and how put together a program that's put together with an appreciation for how interconnected the ETF options and equity marketplaces are, and with all the technology that we've been able to implement into the marketplace, how capital and money is just moves across those three asset classes with little to no friction, and because of that, they're highly efficient, and the prices that you see on the screen, everything seems to move into unison. So we're very excited with who we have speaking. And we're also obviously very happy that there's a good amount of option, content that people, will be, hearing.
I'm glad you brought that up, because I was going to ask you about that. I was looking over the agenda, and it does seem like there are obviously options representatives, and they are indeed scattered throughout the event, which is kind of interesting. As you mentioned, you kind of have a representative sample of options here, then a little bit there, then some equities, and some buy-side and ETFs. So that was by design then. You wanted to try to get a multi-asset class viewpoint for every one of the different sessions?
Yeah, I mean, listen, we really, like I said earlier, we really do feel that our markets have become so efficient. And, there are a lot of participants out there that are not just looking at one particular asset class to gain exposure on an opinion that they have. If they feel that they want to express an opinion on a particular stock that's going to be going up or down, investors now are more sophisticated, and the tools that are made available to them, they have multiple ways of getting that type of exposure than maybe just buying the stock or buying the option or buying an ETF, that they are looking at across all three and have the ability to trade across all three much easier today than they did just 5 years ago.
And whenever you're planning these things, it's kind of like your children, right? You don't want to pick favorites, but there's always a speaker or maybe a session at the conference that really is a highlight to you. It really stands out, really resonates with you. Which one is that for you this year, Jim? Or maybe I'll let you pick a couple if you don't want to choose.
Well, we do have a couple. I mean, listen, we have, as it pertains to this audience, for just option specific. I mean, we're going to be talking a lot around liquidity, available liquidity, not just in options, but in ETFs and equities. So that's something that will be addressed, on the first day with the panel that we have with Steve Cavoli from Virtu, Reggie Brown from GTS, and Steve Crutchfield from CTC. So obviously, Steve is probably the most recognized person there with your audience. Just talking about, available liquidity in the option space, risk-weighted assets, strike, rationalization, which obviously we've talked about, and then listen, you can't. I feel like you can't go anywhere to any type of a market structure event without the topic of market data coming up and the cost of market data. So that's something that we're looking for that to be addressed in the panel before Steve, Reggie, and Steve, with the exchange folks that we have going with Tal Cohen from NASDAQ and Brian Harkins from SIBO. We have a really good retail advisory committee that one of their top issues on market data is this pro versus non-pro categorization for how they are charged for market data, and how that kind of needs to be rationalized and looked at to make sure that investors are not, getting the same investor, the cost of data is the same whether they're coming in on a workstation or a handheld or, one of those other iPad things. So, listen, it's going to come up. We have a lot of options topics to be talking about. Probably the one we're looking forward to for this one is going to be the Thursday kickoff with Brett Redfern and Dan Keegan. A lot of initiatives at the SEC, that impact options, CAT, OPR, transparency into costs, and so on. So that's probably the one that we're looking forward to the most, because the Wednesday morning kickoff with Brett and Dan, that'll kind of set the tone for the whole day of Thursday's content.
I'm glad you mentioned market data, because that is very much a divisive issue, as you might imagine, whenever we have guests on the network. It kind of depends where they hang their hat in the space, how they tend to view market data. You have more of the traditional exchange silos who view it as a very important revenue model for their exchange going forward and are very loath to make any concessions on that front. You have the prop trader and active trader communities and others, researchers who kind of interact with that market data, and they're always going to tell you it's too expensive, so they're always going to complain about that. They don't mind paying for it, but probably maybe a wee bit less, shall we say, than they are paying for it right now. Then there's this new addition that's come online, I'd say in the last 5 years, certainly in the last 10, or we've seen a lot of startups funded out of the West Coast, looking to kind of break into the fintech space, who come from a more technology-oriented mindset where data is just data, and they view data as data should be free. And there should be no inherent cost to it. So it does seem like there are three very starkly contrasting mindsets when it comes to market data these days. So I will be very interested to see how your panel turns out there, Jim. Maybe you're going to stir up the hornet's nest a little bit there. What do you think?
Oh, well, it'll be easy to stir up that hornet's nest.
Yes.
You just got to bring up the topic and let the people kind of speak their opinions on it. But to your point, I mean, listen, today you around market data, again, around this pro versus non-pro charging of market data for investors, especially for the the retail brokerage firms. 5-10 years ago, people were just sitting in front of their workstation, their computer at home, investing, buying and selling securities, consuming the data that way. And now today, so much more of the investing is taking place, on your phone, on your iPhone, and believe it or not, the same investor pays a different price for their market data depending upon which vehicle they're using to enter trades into the marketplace. So, and then there's administrative costs that go on top of that. It's more than just the charge of we're going to charge you $1 if you come in this door, or 50 cents if you come in this one. There's also an enormous administrative burden for these retail brokerage firms and identifying how the investor is coming in, and therefore what the charge should be on it.
There needs to be a lot more flexibility on market data. It can't just be this silo of completely inelastic demand where we continue to just charge more and more to make up revenue shortfalls somewhere else. There has to be some flexibility on that because you're right, it is starting to stifle, I think, innovation and competition out there in the space to some degree. So maybe some more nuanced approaches to pricing for market data, I think that would be welcome across the board. Well, you touched on the cat there, Jim. It's kind of a bit of a behind-the-scenes type topic. It's usually viewed primarily through the lens, I think, of equity market structure. But we've had, the thesis guys, and they were running it. We've had them on. We've had others talking about the cat. It is pretty much a divisive topic, no matter which asset class you're coming at it from the option side, from the listed equity side. And so what are you guys looking to bring to the table on the cat side, Jim?
Yeah, so listen, I mean, we are concerned here because, like you said, a lot of the project management on getting CAT up and running has been occurring, on meetings, on conference calls. It's been more productive from a project management standpoint than it probably was just 2 years ago. However, the concerns that we have here is that what people don't realize is that in 2020, at some point in 2020, firms are going to start getting billed for the CAT, for building of the CAT. Right now, the exchanges have been the ones who have been paying all the bills because they're the first ones who have to start reporting data into the CAT. Starting in 2020, firms are going to have to start reporting, and then therefore they're going to start being sent bills. And understanding the price of those bills and getting transparency into that cost is obviously very important and a concern to us. So that is one topic that we have a lot of concern around on how it impacts the options participants, because as you know, Mark, there's an enormous amount of quoting activity that occurs in options, much more so than in equities. All right, and again, 900,000 strikes, 4,000 underlying securities. There's an enormous amount of quoting activity in options than there is in equities. And when you're building a data warehouse that's supposed to be storing data, there's more data that has to be captured in options when there's less revenue attached to, a unit for a data, a data bit that's sent into the CAT. So we are really hoping that that we do have, besides Brett, we do have the person Manisha Kimmel at the SEC, who is the special advisor to the chairman on this, to make sure that she understood that she's able to express to us how this CAT is going to be paid for, and what is the process that they're looking at for allowing the charges to be incurred on the industry.
Things only become real when they start getting a bill, right, Jim? Then all of a sudden,
that's right. That's going to wake everybody
yeah, exactly.
up. But right now, they just kind of, it's like they're just thinking it's, I got that traffic ticket a month ago and I haven't gotten anything in the mail, so I'm just going to ignore it. And then all of a sudden, you get the summons to appear before the judge. That kind of wakes people up. And I really do think that we think that a lot of people just kind of like. They're not ignoring it, but there are just other things that are on their plate right now that they're focused on, and they are going to get a wake up call when the bills start to come in 2020. And we just want to make sure that in particular the small to medium sized firms that do play such a vital role in the options marketplace as far as providing liquidity and providing quotes on the screen, that whatever pricing mechanism gets put in place, that they're not going to be disadvantaged unnecessarily and hurt on it.
I think overnight CAT's going to jump from a very much a background topic to very much front of mind for a lot of the firms out there in the space. Well, we touched on CAT. We touched on, of course, market data. You already got two contentious issues. I think people are going to be paying close attention to those sessions. But STA, obviously, you hold it in D.C. It's very much a regulatory market structure-oriented type of event. So what are some of the other big ticket issues you're looking to tackle from a market structure and regulatory perspective this year at the conference, sir?
Yes. So I think there's two more that are specific for options. One is that, we do have a good amount of buy side, institutional folks who attend the conference, and we also have a good amount who participate in the program itself. So these asset managers are doing more in the derivative space. So I think that's something that needs to be looked at. That understanding that when we say derivative trading OTC, that is not the same as equity that trade OTC. That we're talking about bilateral agreements here and what goes into that. And how much activity are asset managers using to get their derivative trades on, and how they're going about it. So that's another area that we're looking to kind of shed some light on and get some input from some of the buy side people who will be participating. And then last but not least, and again another contentious issue here too is FINRA has done an enormous amount of work as far as cross market surveillance. So FINRA has a very different view of the marketplace than the SEC, because they're actually taking in, trade data today, and their ability to kind of see activity from one participant as far as how they're transacting in equities, while maybe at the same time transacting in options. They've gotten extremely intelligent around their ability to kind of surveil the marketplace, one participant entering in to options or to equities. And so we're hoping, obviously, with FINRA, they can kind of, on Friday, come in with some insights as far as updates on what they're doing in that cross-market surveillance.
And, Jim, when you and I last chatted back at OIC a few months back, I thought it was very admirable. You mentioned another initiative you guys are working on over there at STA, and I'm hoping it'll be featured at the conference as well, which is, trying to help folks in the industry. There has been a lot of evolution, has been a lot of upheaval in the financial markets over the past decade or so. A lot of people are looking for new ways to implement those skill sets in these ever-evolving marketplaces. And I was very happy to hear you guys at STA are helping a hand in that regard. So is that going to be a focus of the event this year as well? And if so, in what form will that take?
Yeah, so we are going to make an announcement on it. We have our logo, we have our name for it, we have our, core actions and mission statement of the effort. Listen, at the end of the day, I think what we're trying to do with this is, like we expressed at OIC, there's a lot of conference companies out there, associations like STA that have always been willing to help people who have been in between jobs. But I think often that help would kind of be quiet, right? Someone calls up, hey, I'm in between jobs, can I get a free ticket? Yes, yes, come on down. But we want to be a little bit more leaning into it more, and hopefully by setting an example that other associations will follow as well. So the effort, we do have a name for it. I would like to kind of make the announcement at the conference, but the effort's going to have a couple of different facets to it. One, it's a proactive reach out. Obviously we touch a lot of the firms. We hear a lot of things. If there's layoffs at a particular firm, our ability to kind of get the names of the people who were let go. We have a lot of email addresses here, a lot of personal email addresses, the Gmail accounts, the Yahoos, and so we're able to kind of reach out to those people proactively with some type of a letter and a notice, just making them aware, hey, listen, we heard what happened. Sorry to hear about it. Here's some information. Here's a packet with some information that can kind of help you stay in touch with what's going on in the marketplace. And then, by the way, here's a couple of conferences that we are aware of that offer complimentary registrations to people who are in between jobs, looking to get to a networking event as a means to help them find a job, to kind of keep them in touch with the industry. So yeah, we will be making an announcement on it. We're going to launch it in January of 2020, and it's just a question of whether it's a small, medium, or large type effort. But we're pretty excited about where it sits right now.
Well, I'm very glad to hear that, Jim. That's always been near and dear to my heart. I've always tried to give a hand back to the industry and help those who haven't found the path of how they want to implement those skill sets in new ways. I have a few meetings doing exactly that this week, so that's always been an initiative that's near and dear to me, and I'm glad to hear you guys at STA are taking up the mantle as well, sir. Well done.
Yeah, no, we're just like I said, everyone's willing to help, right? But I think, but people who need the help, they're not really. Listen, like I said at OIC, I've been in between jobs twice in my life. Okay, and it is uncomfortable for people who are out of work to be calling up asking for things, right? And so we want to make it a more proactive approach to it, where it is a reach out, making them aware, and kind of taking away that stigma of of being out of work and being in between jobs. So we really, we're just really hopeful that by what we're going to do here, whether it's on a small, medium, or large scale, that other people see it and other associations, and they look to implement similar types of plans or strategies within their own association.
Well, Jim, we laid out a very interesting, very compelling agenda for the event coming up very soon. So if folks are interested, Jim, they want to learn more, maybe they want to register and come down and see it for themselves, where should they go? What should they do?
Well, just come on up to the website, securitytraders.org. Right there on the front page, it has a list of our featured speakers. We're going to be pushing out the agenda most likely Thursday or Friday this week, the final agenda. But, we sent out a couple of notices already on it, so you can kind of get a sense of what the topics are, who the speakers are, and when it's occurring on. And we're pretty pumped with how it looks so far.
Those dates again, listeners, are going to be Wednesday, October 2nd through Friday, October 4th, there in scenic and hopefully sunny this time of year, Washington, D.C. I'm pleased to say we will be there. We'll be bringing the Options Insider Travel-In Studio down to the event this year again, so we hope to have a lot of great conversations coming at you from the event, and hopefully we'll see you there as well. And Jim, we're looking forward to seeing you down in D.C. and hope you have a great event coming up in a couple of weeks.
Thank you so much for having us on.
Well, thanks for joining us, and thanks to you for tuning in to the Options Insider Radio program. We'll see you back here again very soon for more great interviews on the Options Insider Radio Network.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.